Okay, so in this video, we're going to be talking about the grade A and the grade B trade setups and what those mean. Okay, so the first thing we're going to talk about is the supporting time frame setup on the parameters box. You'll notice there's a window in there where you can set your supporting time frame. And in our methodology, we always go off of a minimum of 2 time frames. You're going to have your smaller entry time frame or your lower time frame chart, and then you're going to have your higher supporting time frame chart, which is going to be also known as your directional bias. Now, the supporting time frame, what that means is it's basically, well, if we look at this illustration right here, you can see we have a weekly chart here and we have a 1 hour chart here. So the 1 hour is going to be our entry time frame, and the weekly is going to be our supporting time frame. And in this case, you would have the assistant running on this chart right here, and then in the parameters box, you would have it set to the weekly as your supporting time frame. So what the supporting time frame is looking for is it's looking for the colors of the candle. So it simply means if your supporting time frame is green, that means that it's going to be looking for only buying opportunities. If the supporting time frame is red, it's going to be looking for only selling opportunities. Okay, so now let's talk about what actually generates a signal. What's the criteria for the grade A and grade B setup on the basic level? And it's the same thing that we're looking for when we're manually trading our base strategy, okay? You have your directional bias here, and this is, again, with the supporting time frame, it's looking purely at the color of the candle. And this is in real time. The candle doesn't need to close that color. If it just turns that color, it'll immediately start looking for only buys or only sells from our supporting time frame. So in this case, you can see we clearly have the weekly going down. It's headed down, right? So what it's looking for when it is looking for only sell opportunities is it's looking for that counter trend liquidity. That's where we can get into our positions. It's the safest liquidity we could use to get into the position, and it basically allows us to trade how the market makers trade and how smart money trades, because we're looking for that dumb money to rush in against the overall trend, and we're going to take the other side of that position. So it's going to alert you to when that's happening. So what ends up happening with the signal is it's going to look for expansions that are opposite of your directional bias. So right here, this would be a box expansion. The minute this went up, it would have signaled you right here. Right there would have signaled you as a trading opportunity, okay? And then you would have been able to look at the chart and got in around this, coming around the top of that here. So that would have been a signal. A dot expansion without a box, we have one right here. That would have been a signal, and it would, again, these are expanding up against the directional bias over here. Okay, so we're looking for that counter trend liquidity to come in, and then we're going to take the other side of that back in the original trend. So, and the other thing that's going to trigger a setup is also going to be liquidity lines, counter trend liquidity lines. So again, if we're still going short over here, and we hit a red sell liquidity line, that's telling us that there is good sell liquidity in the market, and we know that our trend is still short, so that would be a situation that it would generate a trade setup signal as well. So it's also, if you can think about it like this, it's basically like a pullback in an existing trend, except it's timed with our 3 market phases. So that's essentially what you're getting with those signals. So when you get a signal, expect to see that you're going to be coming out of a box against your directional bias. So in this case, again, it was short, so you're going to be coming out of a box long. It's in a signal U, so you can try to find that turn. So you're also going to get one when you get, again, with the liquidity line. If it's an opposite counter trend liquidity line, you're going to get a signal then, and you're also going to get a signal when you get a dot expansion. We have one right here. When you get that expansion upward, you'll get a signal as well right there, because again, these are all generating counter trend liquidity, and in the 3 market phases, these are the opportunities we want to be looking at to get in that existing trend and take some meat out of it. So now let's talk about the timing of grade A and grade B opportunities. Okay, so now let's talk about the grade A trade setup. If you notice, we switch up the chart here. We got a pound Aussie 4 hour as our supporting time frame and a 5 minute as our entry time frame. And so a grade A trade opportunity is the assistant is going to be looking for the very first pullback based on the criteria of a reverse expansion, a box expansion, or a liquidity line against the supporting time frame color. It's going to be looking for the very first opportunity. So in this situation, if you look over here, you can see we just rotated green and we had this nice run up, right? So you could see that moving on the 4-hour. Your grade A trade opportunity would have been signaled right here. If you see that little minor liquidity line was hit right there, that would have signaled you to your very first opportunity, and that would be the grade A trade. Okay, so it's going to be your very first opportunity. Obviously, you can see how powerful this is if you watch the master pattern video. At the very end of the video, I talk about, what can you do with this very first opportunity? How can you use that? Because you're so early to the party that it's really the best trade placement you can get. Well, this is that signal, but here's a little bit of a disclaimer, is that you do still have to be careful with this signal, because as the market chops around in a situation like this, you have to understand what you're doing on a bigger time frame, so that you don't get caught in those minor reversals. Okay, you want to really be sure that you're headed in the trend, and that it's going to be a big move. Otherwise, you might want to wait for the first grade B signal to come up. But the grade A, at very least, a grade A signal means that you definitely want to go monitor that market, and if not enter immediately, then maybe enter shortly after. So it's all about timing, and that's telling you this is a perfect time. You're early to a new rotation, and you could really knock it out of the park with this signal. Okay, so now let's talk about the grade B signal. The grade B signal, if you haven't guessed already, it's everything that comes after a grade A signal. So looking back at our directional bias here, all these 4-hour candles go up. You only had the grade A signal here that happened on that first candle, which was right here, right? That was A signal. But now what ends up happening is that everything after that, as long as your 4-hour over here keeps holding green, then after the grade A signal, you're going to start getting series of grade B signals. So right here would have been a grade B signal, because you had an expansion downward on that dot expansion. You would have had another grade B signal right there on this liquidity line. Okay, you would have had another one right here on this liquidity line. So if you can kind of see right here, we had a box expansion that went down. So right there, that would have been another B signal. Right here would have been another B signal. Right here at that liquidity line would have been another B signal. So you get the idea. It's everything after a grade A trade setup. And you can see all these were great trade placement. Some a little bit better than others, but they all put you into this trend at a discounted price, because it's using that counter trend liquidity. That's the best time to look to enter the market, and it's usually the safest time. So anyway, hopefully that explains it pretty clear. Remember, grade A is the first. When you get a new rotation on that directional bias, it's the very first opportunity. Grade B is all opportunities after that, and the only time it resets is when, if you look over here, is when you get a new color candle, or it changes the color, then it'll reset and start over again. So anyway, hopefully that clears that up, and hopefully you understand that. And we will expand on this more, because I know this is going to be a big part of ATS Assistant. We will be over time creating a lot more tutorial videos on specifically, how to enter and use this functionality. So hang in there for those videos too. So anyway, this pretty much completes that tutorial of the A and B trade setup.